Well, welcome to another video. In this video, I'm going to be covering important things you need to become successful in trading. And without wasting time, we're going to be jumping into it straight away. So, when you like this video or you like the content, hopefully you'll be able to like and subscribe and share it with somebody you feel like would need it. So, first thing first, you need a strategy or a trading plan. You need a strategy. This is going to be the first thing here because you cannot trade if you don't have an edge. Your strategy is your weapon. That is what you use daily in the market to hack in profits and so on. So first thing first, you need a strategy, and it gotta be a working strategy. Now, majority of people or majority of traders do have strategies, but the strategies they have not back tested them enough to know that they can perform better even on poor market conditions. So you have to have a strategy, and you have to back test and know that you're 100% sure that it works on the long run. Working on the long run simply means that no matter how much you lose, you're still going to be profitable. You're going to be profitable even if you lose 10 trades in a row out of 20 trades. You lose 10 out of 20, you're still profitable. You lose 10 out of maybe 15, you're still profitable. It depends on the strategy and risk to reward. Okay. So you must have a strategy first of all. Strategies are everywhere in the internet. When you go to YouTube right now, even in this channel here, there's a strategy. Like I think the strategy I told you guys about even using an indicator and leave even this one behind. Even if you go just right now and search for strategies, there's ICT, there's retail concept, there's a smart money concept, there's a lot of strategies. So a strategy is not a problem. Just look for something that works for you. So I'm not gonna choose for you. You know what works better for you. Get a strategy. Okay. Now after you get a strategy, the next part comes in. We're gonna be dealing with the number two. That's gonna be risk management. Risk management is something that especially amateur traders don't really like. For example, me when I was starting trading, I kind of ignored it, and I only came to realize how important it was the moment I started blowing accounts back to back, back to back. So maybe as a beginner, I still don't understand how to even calculate risk. So calculating risk, there's a lot of online calculators. Just go even right now on Google and search for maybe Nasdaq risk calculator, gold risk calculator, and fill in the details. For example, your account size, the contract size, how much you'd like to risk, and so on. Risk management is very very important because risk management is like in trading is like war. Like every day we're fighting, and your capital is the bullets. Okay, it's like you have a gun, and you see this gun without the bullets, it's useless. So you gotta ensure that the bullets that you're using when firing, you use them in a manner that they can sustain you for the longest period of time. So risk management, there comes it. Like snipers, they usually do it. Snipers don't often just pull the trigger, trying to chase a target. They often sit, relax, and wait and wait and wait, and when it is ready they pull the trigger and they get their target. Okay, so be a sniper in the market, and being a sniper, you have to have good risk management protocol. Now, good risk management, I personally would suggest it should never go above 1%. People who risk more than 1%, these are people who are supposed to be, let me say, have experience, some serious amount of experience in the market whereby they know exactly what they're doing. But for anybody who's been trading for maybe less than five, or maybe, let me say, 5 years, risking more than 1%, is very, very dangerous. So ensure that your risk is below 1%. You can risk 0.5%. It's very, very manageable. 0.5%, if you're trading a prop firm, that will take you, especially, for example, with majority of prop firms, they give you 10% a maximum drawdown, and that is going to get you to like 20 losses in a row. So if you have a strategy that you know that you can go up to maximum of 10 losses in a row. Even if you go 10 maximum losses in a row, you won't even blow that account. You'll be just somewhere on the on the half of the risk that you have, meaning that the half of the risk that you're still retaining back is going to get you back to where you want to go. Okay, so 0.5 is good, 1% is good. So have good risk management. Okay, now we go to number three, which is very important. How many trades are you willing to take per day? How many number of trades per day? I hope you guys have a book of, like you have some you're writing these notes down, because this is really going to help you. If you don't write them down, don't your mind won't remember everything. Our minds often have a lot, going through. So what is the number of trades you're willing to take per day? Because you see, you cannot just take trades. Anything that comes upon your way, you take. This, remember, I told you, you have to be a good risk manager. You are a sniper. You don't just take any target, because the target is also trying to, waste your bullets. It's trying to waste your capital. So you have to wait and wait and wait and have those good setups, in which I will make a next video on the checklist. After this video, make sure you subscribe so that when I upload the other video on the checklist, like my template on checklist, before I enter any trade, you must have a template. You must have a checklist whereby you're going to be check. Okay, for example, if you're trading ICT, maybe you're waiting for break of structure, market structure shift. You're waiting for liquidity grabs. Check. You're waiting for, and also you have to check on your psychology or emotions, like how are you feeling before taking that trade, because these things are really going to matter. Because if you take a trade when you're hungry, when you take a trade when you're desperate, when you take a trade when you're feeling when you're feeling not okay, like maybe you just take a loss and you're trying to revenge, you have to know your state of mind. So when your state of mind is not calm, don't take a trade. Those That's gonna be part of the the checklist. But again, the number of trades. I suggest, as a beginner trader, try to go with one, two. I mean, like 2 trades per day, maybe 1 to 2, and maximum. Let's go with 3 trades per day. 3 trades per day is perfect. Okay, so one for London, one for New York. Okay, and sometimes for advanced type of traders, you can even have 4 trades per day, because depending on if you understand the concept of time and price, you'll be able to know what I'm talking about. So that's on the number of risk per day. So ensure that you don't overtrade. Like, you have a rule that is written, like once you take those 3 trades, it's done. Okay, and apart from that, you need to have like, for example, a non-negotiable, trading plan, that if anything, like, you have a plan that is well written down, that if anything doesn't happen as supposed to happen, you do nothing. It is like a no plan, no trading type of thing. Okay, like, you gotta have a plan. Like, for example, you have to know the bias, whether are we bullish or bearish, or are we in accumulation, just neutral, price is not giving us good vibes, right? You're gonna have knowledge about economic events and factors of news and so on, especially the red folder news, so that you don't get caught in when this market starts becoming volatile during news. Okay, you gotta have levels, that before you enter trade, price must come to certain levels. For example, let me give a good example here right now. This is for maybe for people who trade ICT. As you can see here, this was liquidity resting here. This was liquidity resting here, and we had news today. It was I'm using UTC plus 3, and so hopefully you guys will be able to understand that whatever time I'm trying to indicate here is different, maybe from whatever you're saying, because I'm using UTC plus 3. So we had liquidity resting here, and we had news here. Okay, so this was news. This was news of CPI yearly, and I think CPI something. It was right for the news. And as you can see, what did price do? Price just came to tap liquidity in there. But now remember, we don't trade news. Like, for example, me this trade, I was already in some longs. I was in some longs from here, and for some reason, it's way more advanced. I can't really talk about it right here. Right here, right now, why I was doing some longs here. So when price went to deliver, I did not even close that trade. Actually, not even take profits, because of the rules we have with the pro firms. So I had to wait for a couple of minutes, which I did after maybe some few minutes, and now I closed it manually. And now people are waiting for, maybe for the New York Open, that is on 9:30. Over it is at 16:30. So because I'm using UTC plus 3, so this what also I mean this was what was happening here. I want to take a look here. Already we're taking liquidity here, and already we're on the premium area. Okay, we're on the premium area. So when on premium, we seek for sells. We don't look for buys. And you see with how the 930 often usually happens is that it usually seeks liquidity from one point to another, especially imbalances. So if we had a fair value gap, for example, this one here, as you can see, price came down here to it right here and jumped back. Remember, guys, this is just trying to show you what a checklist should be looking like what you need to have. So, for example, let's assume this you're a trader who likes taking your trades on New York Open, that is on 9:30, right? Here's 9:30. Your first checklist should be: do we have liquidity above or below 9:30 open? Remember, we opened here. This was the open, this was the high, this was the low, and this is the close. Okay, so do we have liquidity, valid liquidity point? Yes, we had this one here. And what was the opposing liquidity? We had this one here. We had this one here. You see this one here? Yes, we had this one too. And apart from that one, you also had this bullish 15-minute fair value gap. So once we had these two, so we have a valid liquidity point. So we wait for one side to be attacked, and we target the opposing side. Okay, so what did open do? We opened right here, went to attack the buy side liquidity. Now maybe you'd have waited for maybe for break of structure or something like that so that you can have sales. But as you can see, price came too fast and did not give an opportunity, but it created this bearish fair value gap. So the next checklist should be: do we have any gap created or inefficiency created which is siding with the target? Okay, remember we are targeting down below here. Okay, so remember, price only took this one, but we still had this bullish fair value gap of 15 minutes, not yet fully filled. And as you can see, at 17:10, 17:15, price went back to fill in that gap, and this was your entry. This is where you're supposed to be entering. So you enter a short, maybe in the consequent encroachment, your stop loss just above this high. Guys, I don't trade this. I don't trade this. Is not my trading model, but I know how it works. I used to trade this one sometimes back, and maybe you target 1 to 2. Yeah, just below there, that gap, that's 1 to 2.444R. 2.4R, okay? And that's it. You already bagged your 2% here. So you had a checklist. First of all, we had a valid liquidity to target. We had a fair value gap supporting that entry. And take a look again. We had even a bearish 15 minutes fair value gap here. And that's where price came to fill in and drop down. And just like that, you have your two. So you must have a checklist. And I think, guys, this will be this for this video. I'm gonna do another video on going deeper into the aspect of checklist and state of mind and things that you're supposed to be looking for before even pressing any sell or buy button. And if possible, you work with limit orders. They are way more professional and they're way good because you won't have that tendency, like of what if this goes wrong. You won't have those emotions of fear. Okay, so I don't want this video to be too long. This was about the important things you need to become successful in as trader. Remember again, strategy, risk management, and number of trades per day. Next episode, we are going to be talking about the checklist. It will be this is a continuation series of how to become profitable. So I hope you guys enjoy this one. Make sure to like and subscribe the video, and I'm into the channel. And let me see you guys to the next one.